All right, good afternoon, everybody. Oh, man. Mets are in? What does that mean? They're in the playoffs? I mean, they better be if Stevie Cohen, quit trading over this. I thought they were the worst team in baseball, but I don't know anything about baseball. What's up, folks? Happy Monday. They felt crazy, but it was kind of a tight day, but it felt crazy. All right, but before I talk about it, the disclosure, I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I am out of JD for the first time in over a year. I have no position in JD. And I still have a little bit of a position in Tello. Didn't get the move I wanted from it. I was able to sell a little bit on that up move today. I bought it on Friday. And then I wanted to stop myself out, but there was no liquidity. So I couldn't get out of my entire position. And then it dropped like 50 cents below where I was trying to stop myself out. So I'm kind of just managing it. I was able to get out of more than half at where my stop was supposed to be, but the stock has just absolutely no liquidity at all. All right, let's take a look at the market. So, like I said, it was like kind of a tight day, but we had some craziness this afternoon. Right now, the SPYs are up 0.3%, so they're a little bit off their close, but green. Qs, same deal. They're off like 50 cents from their close, but up 0.17%. And the Russell is up 0.13% and has pulled back like 30 cents from its close. Yeah, so kind of a crazy afternoon trading session. Beginning of the day was fairly choppy. If you look at the SPYs, it seemed like it was a very boring trading session. But it wasn't that boring if you focused on the right stocks. There were some names that were moving. Tesla was a good trading vehicle for me today. NVIDIA was a good trading vehicle for me today. Apple gave that great opening breakout earlier in the day at the open that we had been looking at. The Chinese names provide a lot of trading opportunity. But the SPYs themselves didn't really do much until 2 o'clock. Jerome Powell was speaking, and it led to a pretty big dip here when he basically said, hey, I'm thinking we're doing 25 basis points times 2 this year, so less than the market expected. So quickly the market was pricing that in with the down move, and then we V-recovered off that. I wasn't surprised to see a bounce back. The degree of the bounce back was impressive. I took a little short scalp, like right here at 250-ish or whatever. Got all out of it by this down move, and then we ripped higher. That could be end of month, end of quarter rebalancing flows, though, which sometimes creates for pretty wacky price action into the close at the end of the month and at the end of the quarter. So really strong close. I think it's a new all-time high close for the SPYs today. Yep, looks like it for the S&P, for the SPYs. New all-time high close. So really strong day. Looking at the daily chart here, this looks great. I've been, I don't want to say complaining, but I've been trying to talk my book a little bit, talk my thesis a little bit about the bulls not really getting great technical confirmation on the upside ever since the Fed announcement. We haven't any good strong days of closes on highs. You could argue that today is that. It was a good strong closing session. Really, it was really all came in the last little bit there, but we kind of pivoted off the ADMA on the daily chart. There's a little bit of an increase in volume, and we closed on highs. So could this be the technical confirmation that bulls are looking for? Perhaps. I still want to see what the next couple trading sessions look like, just because there is a chance that today's action was looking as good as it was for our daily candle because of it being, like I just said, the last day of the month, the last day of the quarter, with a lot of rebalancing activity that needed to happen. So things are looking pretty good here technically for bulls. You certainly can't deny it. Let's see if they can hold that and continue that over the course of the next couple trading sessions. And for me, for my shorts, the shorts I have on are still in the money. I'm still green on them, and trading and managing them every day and putting a little more cash flow in my pocket. So I've got no reason to just kind of puke out of them. Even as the market technicals are looking a little bit more bullish, I'm gonna try to keep them as long as I can. But once this market really starts confirming things, and once I give back all my P&L, then I'll probably be running to the exit on my shorts as well. But one step at a time, I'm still in them for the moment. And the SPYs gave a good close, a good daily candle. The Qs gave a great daily candle here. A couple days of rest. It's tail into the 80 MA on the daily with a strong close. Today looks like it could be the next potential pivot low of this upward grind that the market's been in. So I think that today's low is going to be really important for both the SPYs and the Qs going forward technically. So keep today's low on the radar. If it gets lost at any point in the relatively near future, then it's showing you that bears are really regaining some degree of control. But for the moment, the buyers are in control. And the IWM is not giving me a daily candle. There it is. The IWM did what it needed to do also. It held in. Really, the Russell should get above Friday's high and get above 222 to start looking good and giving more technical confirmation. But it's still above 218, which is the key downside spot. So all in all here, market technicals still look strong. The bulls are still showing that they're in the game, that they're in control. And if anything, today's potentially a confirmation candle with a close on highs and higher volume, and it solidifies, I think, to some degree the importance of today's low, which is something we need to pay attention to going forward. From a trading perspective, this morning was interesting because we had Apple set to open up above 230, but we had Nvidia set to open up beneath 120, which are really key levels. These are both obviously leadership stocks. So we kind of discussed in the morning meeting, let's pay attention to Nvidia 120 and let's pay attention to Apple 230, and we'll see if either of them hold or lose those levels to give us a little bit more market confirmation. Well, here at the end of the day, we got our confirmation. Apple pretty much closed on highs, closed at 233. It was a great breakout in Apple today. There was a great opening drive trade through that 230 that we were looking at in the morning meeting today. I hope somebody caught that. So really good, breakout there in Apple. And Nvidia, which opened up beneath 120, which could have potentially signified a breakout failure from the breakout that occurred here on September 24th, was able to get bought back up off the 21 EMA and recapture the level and close above the level. So that means that Nvidia is still intact. Apple's leading us higher, looking great. 230 breakout. We discussed that the market could go. Maybe Amazon off this 21 EMA could bounce. Doesn't look like it did. I really didn't watch Amazon at all today, but stayed weak for another session. Maybe worth being on the radar for an RDR in that 185 area tomorrow if the market stays strong. Google, we talked about 165 as a potential breakout level. I also pretty quickly took it off my radar, and it only really broke out into the close when the market did its rip. So a little tricky to capture Google there, but Google 165 is something that we'll also continue to monitor. Maybe we can, buy a retest of the level tomorrow, or maybe it becomes a failed break at a certain point. But for the moment, bulls are in control here. Tesla, just another day of me being able to short the heavy upside opening extension in Tesla to be able to make really good money on like shorter term, heavier trades in Tesla to then enable me to maintain my short swing, which is now $32 against me, and still be in the money on this thing every day. Tesla, if you look at this 5-minute chart, so first of all, if you look at the daily chart, the ADMA is down at 252. Stock traded up at 265 today. So when it got up to like 264.50 this first time up here, I shorted a lot more aggressively. And I was out of all of that by 263. So it was a good trade, good scalp. And then from there, this thing just continued to fail all the way down and broke the opening low. I feel like this pattern has happened a lot in this thing as it's moved its way higher. Yeah, I just scrolled back. I've been trading this thing every day. This is how I've been able to make money in this as it's been so strong. Is my heavier opening trades that I've been taking when you have the opening upside extension combined with the daily chart extension. This has happened multiple times where you gap up and then break that opening low. It happened to some degree on Friday. Gap up, initial move higher, extension, breaks the opening low, fills the gap, and then closes strong. It happened on Thursday. Gapped up really big, really strong up here, extended on the daily chart, breaks this wedge to the downside, breaks opening lows, fills the gap, goes negative. That day it actually closed negative. Happened on whatever this day is back here. This is a very similar pattern actually as to today on the 24th. Gapping up, continuing, getting very extended. This is where I'm starting to short it heavier, get the move into the moving averages. It overshoots that, breaks the opening low, goes negative, but then closes strong. So it's kind of been that very similar move here for me on a lot of these days in a row that's been able to pay me on the short side in the beginning of the day. So still a healthy degree of extension in this Tesla on the upside, but the market is holding in, and Tesla honestly has been a real breakout leader. It's been a breakout leader ever since it broke above this wedge that we had been talking about back here in this 230 to 235 zone. So continue to be super strong. China, I got to talk about these Chinese names. So JD, congrats to me, patting myself on the back. A lot of patience, but I was able to capture my full move up to $41, which had been my real target on this thing for a long time, and then flipped short intraday for a trade today to make a bunch more. We were pretty focused, I think, on like the JD Alibaba extension short trade. Some of you guys were jumping on the Alibaba short earlier than me pre-market, made some money on that one. I didn't get involved until after the market opened, and I was still patient. Especially just because I've been so long biased, I've been trying to be patient. My trade was actually in here. I know some of you guys are shorting the open, shorting the pre-market, and caught those opening moves. I shorted this this move here more for momentum on the break of that 8, which I thought would be possible given the daily chart extension, and then I kind of re-shorted and added size into this 42 area on this bounce back to capture most of this down move here intraday. So that worked out great. I'm bullish on these stocks big picture. I still am, but the degree of extension here meant it was time for me to get out of the long at my target. Really got out above the target, thankful to the gap. And then we were able to short intraday for a move. I like the idea of getting back long these names at a certain point, but just need a little bit of patience still. Even the stock pulled back from 43 to 40 almost. But it's still $5 extended in a $40 stock off the ATMA on the daily. Baba, same deal. Alibaba today, we had a few really good short trade call outs in Alibaba. My bigger one was in here on this like inside 5 and down off highs with extension on multiple time frames, and then kind of held a core position all the way down to 108 that I liquidated down there just for a day trade. You could say I left some money on the table. I did, but just looking for some day trades here for some cash flow. So Chinese names were very in play, and that's pretty much it. Tesla, Chinese stocks, had some other smaller day trades that aren't even really worth mentioning or going over. Kind of covers my day. So that's all that I've got. I am happy to take a look at whatever you guys have. So first question I think I'm seeing here is from Rich. I'd love to hear your thoughts on where we go from here now that the collar is out of the way. Sure. So we had the market, off what you're describing, extremely pinned at 5750 SPX. So there you go. I was about to say if they rolled that collar to a new price, the first thing I need to know, if you want my feedback on it, is to get a better idea of what those prices are of that trade that potentially creates a new pinning effect on the market. So Bill providing that information for us here in the VTF as this kind of new potential range. So that mid level there is that 54.50. I want to see the gamma chart when that comes together that you've posted with this 57.50 build, because that was like made it really, really clear where the dealers needed to be buying below and selling above. So we'll see, Rich. The biggest thing I was going to say also is, despite any potential new collar, which we need to see that information, I also want to see if there's an initial loosening effect off of that. So we'll see. My thought process had been, we've consistently been seeing this VIX and UVIXI kind of trade higher these last couple of days, but the market not being able to break down, probably in many ways because of that pinning action. And I know that UVIXI sold back down a little bit today. I would argue that for where the S&P is trading with its new all-time high, that the VIX itself should be much lower than it is. But I think that this elevated VIX compared to where it otherwise should be, and this UVIXI move from the last couple of days, is just related to a lot of hedging that's ongoing for into the election, which, if anything, when that hedging has to get unwound after the election, could enable us, I think, to potentially break in either direction, but I would assume up. So my initial thought process is, given the VIX move, once the collar expires, and that unpinning expires, then maybe we can get this market to loosen up, and maybe that bear side of the thesis can actually work out a little bit better. The flip side is that the bull side of the thesis could work out a little bit better also. So kind of just like, I'm still just a little bit in wait and see mode. I really want to see how we trade the first couple of days of October. And also want to see just the update on the gamma chart as the new range of this collar kind of comes into play. So yeah, let's kind of wait and see, I think, a little bit more. Because the technicals are bullish, but the VIX is trading higher than where it otherwise should be, which potentially means that maybe the market can move a little bit lower. But I also want to see if this creates a new gamma pinning effect anywhere in the market also. So we'll see. From Cody, how do you recommend playing the extension bounce trade after Powell's comments? Like, keep it simple with the indices, or look for what's relatively strong? I've been keeping it simple with the indices, and I traded it. I traded it with the TNA actually at that time, but you could have picked your spot. I've been trading these trades like very conservatively and patiently. So I waited on TNA to actually buy until we were kind of deep into this third candle and there was a lot of extension here. And then, I buy a little bit of a core and I added that a little bit against me, just kind of trading versus the ADMA as a target, but not even with the ADMA on the target. Like I said, I'm trading it very conservatively. I'm having a target that is assuming that this ADMA could be very quickly working its way down. So I haven't been taking it with a boatload of stock. I've been trading it very conservatively, and I've been doing that stuff on an index level primarily. So here for that initial bounce trade, I did it with TNA. As you can see, I was all out prior to the ADMA. I actually had a final offer at 43.46 to get out, which would have coincided a little bit more with the ADMA. But then I used a risk-reward stop just in case I didn't get filled. It went all the way to 43.30. I'm not going to give it all the way back I'm not going to give it back 50 cents to make 6. So I used a risk-reward stop, and this also just goes back to having a conservative game plan, where then I just stopped myself out of that trade really quick. And then on the flip side, I would have shorted the IWM, but there's still not. I still think there's a great product for IWM short. You can do it IWM itself, but I don't like TZA, and TNA is always hard to borrow. So initially, then into this market bounce, right? Here's where we broke down from at 210. When we really overshot and we're retesting that level, I said, all right, let me try for like a cute little short here, pretty much looking for exactly this move, looking for a little bit of an overshoot to the downside of these moving averages. You don't have much upside extension here. You have a little bit, but not much. But the trade is less on the upside extension on this move, and it's more on the fact that we just came from extreme downside extension to moderate upside extension, which coincides with the starting point of the move, was really my thought process. So I shorted some U-Pro, I took a little bit of an ad, and it was the same deal. Just had bids out that were just conservative for the quick overshoot of these moving averages. Again, if anyone listened to what I was saying with Greta in my meeting with her at noon today, I'm just talking about how I'm doing a lot more of just, I'm just trying to make a couple $100 here and a few $100 there, and maybe $1,000 here if it really works out well on some of these day trades, and just trying to be consistent with it and bank it and keep the downsides, really tight on those trades and not let anything get out of control. So, it's a lot of, this quick move with the TNA and, this quick move with the U-Pro just to, put some cash in my pocket. I'm not doing it on huge positions, but, they add up when I'm not having any outsized losers because my risk management's been really in check on that stuff. And I'm able to, like I just said, bank some kind of consistent money. And then when they're not working out for me, I'm tending to be out of them like really quick. Like even this SMCI, unfortunately, worked really well without me. You can't see because this candle made a new high, but I was initially short versus the high of the candle. So I shorted some. I basically shorted the initial high. I got a kick that was at more than 1-to-1, but it has to be more than 1-to-1 with the stock because the spread's so crazy. Stopped myself out. Was still looking at this extension. Actually attempted to re-short. Offered out 437 spot 99. High was 437 spot 98. Missed the move. When I'm doing these trades I'm doing right now, I don't care if I miss the move. I don't care if I get stopped out on a small loss or break even and then the trade works without me, because I'm making like so little relatively on them compared to how I usually trade. Like look at this U-Pro, how little I'm actually making on it, or this TNA, how little I'm actually making on it, that I can't let anything get out of control away from me. So, that will mean just stopping myself out really quick. Like I tried Neo once today, stopped myself out really quick. I tried Apple Short, it actually worked. I retried Apple Short in here, and then this is me stopping myself out almost at this pivot high, and then it worked without me, which is a little bit annoying, but it is what it is. I gotta stop myself out real quick. Or Nvidia, I'm swinging it, but I also took like a sized up day trade initially first in here that worked out really well, and then I was trying it again in here, and then you can see this is me stopping myself out of an additional ad, this green dot. I'm just keeping this stuff really tight. If it works, great. I'll make a little bit for myself, but I'm stopping myself out of that stuff really really quickly when they're not, because from risk reward I need to. And then every once in a while, like if one really works in my favor, then I can be there for the reward. This JD short was still a really nice 4-figure winner for me when I'm trying not to let myself lose more than, like, honestly, a couple $100 in different spots on these trades. Some areas even less. $100, $150, $250, maybe $500. But still, when the trade is working out for me, like this JD did, being able to make a couple $1,000 off of it. So that's kind of more what I've been doing recently. I know that more than answered your question you're just asking me about, should I keep it simple with these indexes for these trades or not, but just kind of going in a little more detail on what I'm specifically doing. Yep. Not seeing anything else in the VTF. Popping over to the YouTube from Cyril. What's up, Cyril? Do you think we can see some more profit taking in Chinese names? Yeah, they're super extended, so they could easily pull back a little bit more. I got all I was looking for from them on the short side today. And if anything, there's a good chance that if JD is below 40 tomorrow, I'll probably restart a very small long. But with room to build into that all the way to 24 if it wants to, because that's been my trade. But there's definitely more room for this to pull back. What do you think of Lily below the 50? I don't have a 50 EMA on my chart, so you'd have to give me the price. I'd want to know what direction it's pointed in and stuff like that too if I was actually going to look at the moving average. So I don't have a strong opinion for you on this, Lily. It's an interesting break of this support level that it had on Friday last week, and I feel like we looked at that on Friday, but then it held in and bounced back really well today along with a lot of other things in the market. So no real thoughts. Thoughts on Google potential breaking of the trading range. Yeah, so Google long 165 was on my list today. Unfortunately, it didn't break that level until the last hour with the market going, because it's a trickier trade. But I like it. I think you can keep an eye on 165. It's potentially something that you could buy versus that level if it gives you the opportunity on a retest or something like that. Good stuff. Yeah, so you're commenting every time they're gapping the IWM. You could apply this for any index right now. They're selling it down, but then the buyers are also been coming in and defending it. I think that just circles back to the collar conversation and the market penning conversation that we're having, where whenever we're above the level, they're selling us down. When we're below the level, they're buying us up. And yeah, it's the market makers who the market makers were long. The dealers were long like $16.5 billion of gamma at the 5750 SPX level. So basically that means that, you know, on a 1% move above that 5750, that they're selling $16.5 billion of futures of S&P, and it's a huge number. So just super difficult for the market to break out of that pin that it had. But that pin is undone as of today. But I gotta do a little more research. They rolled that collar into some new levels, and I want to see if that creates just a new massive gamma spike in the chart that like Charlie McElligott puts out all the time that shows that stuff. No problem, Cyril. Thanks for the questions. What else, guys? I forgot to turn on my video camera on the YouTube. Anything else? I've got a 5:30 train to catch back to New York City, but I still have definitely another 20 minutes if anybody has any questions. Okay. Well, if there's nothing else, I'll take the extra 20 minutes then to make sure my bag is packed and bang out a couple quick emails before I shut the computer down. So have a great night, everybody. I will see you all tomorrow.